Accounting is often referred to as the language of business, and for a good reason. It is the systematic process of recording, summarizing, analyzing, and reporting financial transactions and information. Whether you're a business owner, investor, manager, or simply someone interested in financial matters, understanding the fundamentals of accounting is essential. This video aims to provide an overview of the basic principles and concepts of accounting, shedding light on its significance in the world of finance and decision-making. The fundamental accounting equation. At the core of accounting lies the fundamental accounting equation, assets equals liabilities plus equity. This equation represents the balance between what a company owns, assets, what it owes, liabilities, and the residual interest of its owners, equity. It is the foundation upon which all accounting transactions are built and helps maintain the financial equilibrium of a business. Double entry accounting. Double entry accounting is the method by which transactions are recorded. For every transaction, there are at least two accounts involved, a debit and a credit. This system ensures that the accounting equation remains in balance and provides a system of checks and balances against errors and fraud. Types of accounts. Accounting accounts are broadly categorized into 5 types: assets, liabilities, equity, revenue, and expenses. Assets and liabilities are classified as either current, short-term, or non-current, long-term, depending on their expected duration. Understanding the nature of these accounts is crucial for accurate financial reporting. The role of financial statements. Financial statements, namely the balance sheet, income statement, and cash flow statement, are the end results of the accounting process. These statements provide a snapshot of a company's financial health, performance, and liquidity. The balance sheet reflects the financial position at a given point in time, the income statement details revenue and expenses over a period, and the cash flow statement tracks cash movements. Accrual versus cash accounting. There are two primary methods of accounting, accrual and cash basis. Accrual accounting recognizes revenue and expenses when they are earned or incurred, regardless of when the cash changes hands. Cash accounting, on the other hand, records transactions only when cash is received or paid. The choice between these methods can significantly impact financial reporting. Importance in decision-making. Accounting plays a vital role in decision-making processes within organizations. It provides stakeholders with reliable information to assess profitability, solvency, and operational efficiency. Business owners use accounting data to make informed choices, investors rely on financial statements to assess potential investments, and government regulators use it to enforce tax laws and financial regulations. In conclusion, accounting serves as the bedrock of financial understanding in the world of business and finance. Its principles, including the fundamental accounting equation, double entry system, and financial statement analysis, are indispensable for making informed decisions and ensuring the financial health of organizations. By grasping the basics of accounting, individuals and businesses can navigate the complex world of finance with confidence and clarity.